The way that this week has started has been quite interesting. I wanted to drop something in the group yesterday, but I couldn't. I can kind of sort of talk about it today. I literally watched somebody place a trade today. It was spread out across six different assets, but it was $2.12 billion. And it tripped me out because I was thinking like, I've never seen a trade with that many commas and that many numbers before. And it was just trippy because I literally was looking at a computer screen that looks no different from Mr. Levels, but it had like, extra stuff on it. And hold on for a second, sorry. It had extra stuff on it, but at the end of the day, it was like, for the most part, the same. And I was really trying to figure out like how and why like the whole thing came about. When we stopped recording, I can tell you that. But it was just really interesting because I was thinking about the markets, and I told you guys on a Zoom call, it was either in October, November, or December, that the markets were outpacing fundamentals, and it makes sense for markets to be at the levels where they were based on the underlying economy. So, for those of you who follow Kathy, ARK funds, that sort of thing, last year was the year for ARK. If you look at Warren Buffett, Berkshire Hathaway, if you look at any of the steady funds, any of the funds that move at a very steady rate of return, if you look at where they are now, and if you look at what happened with them last year, they were pretty steady. They didn't really take a hard hit. Last year was a positive year for everybody, but ARK funds really like exploded. They were up like 300%, depending on which fund you were actually looking at. Now, ARK funds have actually come back down and have met the level where Berkshire Hathaway is trading at right now. Like literally, they're trading at the exact same level now. So it didn't, or it wouldn't have mattered if you put your money in with Warren Buffett or if you had put your money in with Kathy at this exact moment in time, you both will be like, both accounts, let's say if you had two accounts, both accounts would be at the exact same spot. You would have had more gains with Kathy had you taken profit, but had you just held on, you would not. So a lot of this now is just coming back down to what is going on in the overall market, like what's going on in the underlying economy, and how is this going to play out going forward. So markets hit some crazy levels like around somewhere between like 9:45 and like 11 o'clock. The market hit some really funky levels, and it enticed a lot of people to get. I started to put a message in the chat, but I knew I was probably going to have to explain it, so I decided to wait. And I was going to ask you guys if you guys thought that this was a dead cat bounce. It sounds morbid, but it's an actual term that's used in the industry, dead cat bounce. So like literally in a downtrend, is this that bounce that you get that will be that bounce that gives false hope to retail traders to like get in the market before reaching another mini high and then coming back down again, retesting the bottom. This is a market week where anything is up for manipulation. What makes this week very pivotal in that is that we also have world news going on that is putting fear into the market. So we always talk about China and Russia. Some way, somehow, it always comes up on the call. However, this time it's a little bit more serious. So the United States has on standby right now 9,500 troops. Earlier it was 8,500. Now it's 9,500 troops they have on standby just in case Russia decides to do their thing with Ukraine. What makes that so pivotal for this week is that we have rate news coming out. This rate news is going to affect our economy. We have to hear what Jerome Powell is going to say about rates, about the economy. We had some news that came out at the beginning of the week. It was okay. It wasn't as great as it could have been. And the world is watching. The world is watching to see what we're going to do, because us changing our rates literally will change the dynamics of how trade is done. Because remember, commodities trade is done primarily in the US dollar. So oil prices were kind of rocky today, because when there's a strong dollar, that means that oil suffers, because oil prices, oil trade is done in the US dollar. And so as the dollar gets stronger, it causes people to not want to trade commodities as much, because they're having to essentially pay more for it. And anyway, everybody's watching. Everybody's watching that. Everybody's watching our response to Russia. The response that we give to Russia is going to dictate how China responds, because China is trying to do the same thing, but they're trying to do it with Taiwan. There's a lot of people who say, well, China's not going to do that. China's a little bit more friendly. China has a little bit more to lose right now. In all actuality, they don't. When you think about the allies that China has, the friendships, the partnerships that they've made, things that they're currently doing right now in the rest of the world, China doesn't care. As much as we would like to say that no, China's not going to invade Taiwan, right now the US has to show a quote unquote front, has to show some type of dominance in this situation, because if we don't, that literally opens the door to any other country who's trying to do anything remotely similar to what Russia's trying to do right now. It gives them a free pass to just go ahead and do it, because the United States isn't going to do anything. What will hurt us is if the United States kind of sits back, Russia does its thing, and we send 9,500 troops. And China's like, oh, that's it? Well, we're going to do it too. And they both do their thing simultaneously. That is really going to hurt. Going to election later this year, Biden's approval rating is already lower at this point than any president we've had. It's the lowest he's had. When people are asked about why they have issues with this current administration, us sticking our nose where it doesn't belong is number one. Closely behind that right now is COVID and the response to COVID. So tomorrow is going to be a
Give us a moment, y'all. We having some technical difficulties. All right, cool beans. While Corman getting herself together, I'm gonna go ahead and get started on technicals. She'll probably pop back in a second. Um, let's jump into DXY. All right. All right. So looking at DXY, looking back at yesterday, market opened up kind of bullish. Um, we didn't break above this previous high on the 6th. We came up and retested and market pulled back, but we got to see if we can get below this last down candle right here on the 21st. And then if we can close below there, then we'll wait for price to come back and repull and retest this structure here. And if we don't break back above this structure, then I would like to see the dollar come back down to retest the structure to the downside here and retest previous low. However, if this daily candle um, pushes up above this previous high in this structure here tomorrow, well, throughout the rest of Asian markets tonight and going into London markets in the morning, we can close above here, then y'all already know the scope. We're gonna wait for the retest, and if we hold, we'll look for the dollar to push to the upside. Um, 1 second. There's Corman. So I'll come back to that in a second. I'll come back to technicals in a second once Corman gets finished. All right, it's back on you, Corman.
Okay, so I don't know if that was somebody's way of telling me to shut up or what, but I'm back now. Um, all right, so Wednesday, back to what I was saying. The markets are going to be heavily manipulated on Wednesday. And then the way that this week ends is essentially going to tell us if the market has found a, some people call it a washout level, some people will call it a bottom, some people would call it, a support level, whatever. The end of this week is really going to tell us um how all of that's going to truly shape up. So I'm going to share my screen. I'm going to go over some stuff on factory calendar, turn it over to Mr. Levels, incorporate some of the other things that are going on in the world into this news. All right, so I already told you guys about the news that we had that came out today. It was okay. It wasn't the greatest news that we've had. We did miss numbers, but I mean, we weren't really anticipating hitting them anyway. Um, if you follow the Forex Factory calendar, when they first put the forecast up, you would have seen where they actually have changed these numbers twice before the number actually came out today. So they were anticipating that this was going to be bad. They just didn't adjust it low enough. And then as you can see for Europe, it was pretty mixed. And then for the UK, they missed their numbers as well. So this is just kind of one of those periods in time where everybody's on edge. Everybody's kind of cautious because no one knows what's going on. And COVID, Omicron, Delta, that's going to be what everyone uses as a crutch. Next quarter and the quarter after that, no one's going to be able to use Omicron as a crutch anymore. So it's going to be truly like, how is the economy functioning at this point? Also, I had to look because Germany, they were one of the only European countries that actually made their numbers and did fairly well. And I had to figure out why. Germany's economy is actually looking really good right now. A lot of people sleep on Germany, but Germany's economy is looking really good. Also, the other thing about Germany, if you don't know what's going on with Germany right now, they are actually, how can I put this without sounding salacious? They are, they need Russia right now more than anything because of oil. How oil flows to Germany, it's strictly like over 90% of it comes from Russia. So right now, they're like literally doing any and everything Russia says, because if not, their economy collapses. They have like no fuel whatsoever. So they were supposed to have sent supplies to Ukraine. There were other countries they were supposed to have sent supplies, aid to. Russia told them no, and they didn't do it. So Germany, with their economy looking the way that it does, and with them also kind of taking their cues from Russia, I feel like as long as they continue to do that, they'll be fine. If you hear anything in the news that says otherwise, then you can anticipate that some of these European numbers will start to look a little off. But going into tomorrow, it's an Australian holiday. The biggest thing we're going to be looking at tomorrow, because every day for the US has something that's coming out that we have to look at. So first of all, before any news on the Forex Factory calendar is pre-Fed day. It's like the day before the Fed speaks. So that's already like an automatic, like wet blanket on the day. But we also get consumer confidence numbers that come out. And if they're anything like the last numbers, if they're anything reflective of what the current administration's approval rating is, confidence is not high at all. So there are things that you can start to look at in the market to help you to understand where some of these numbers might be and where they might be leaning towards. I don't suspect that consumer confidence is high. Omicron, inflation's high, prices are high. They're talking about how we're near maximum employment, full employment, and we're, our unemployment rate is pretty much where it was at about the 25 to 30, maybe even 40% range when COVID first started. We haven't gotten back to true pre-COVID levels yet. Also, when you start to look at our unemployment rate versus unemployment claims, claims are going up. The unemployment rate is coming down. And then you start to look at companies like Amazon. They're rolling out Amazon Fresh, Amazon Go, and these are like fully automated stores that have no cashiers, no baggers, no nothing. You walk in, you have on a book bag, pick up something off the shelf, throw it in your book bag, and it knows you picked it up. When you walk out the store, it charges you. It automatically sends your bill on your receipt and stuff to your Amazon account. So like that kind of stuff. So consumer confidence is not high. People are paying attention to these things. Wednesday, Fed Day. I don't care about anything else on Wednesday. Like, yeah, Canada has their number coming out. It comes out before ours. It means nothing. If Canada's number was coming out after hours, it would mean a little bit more to me. It would hold a little bit more weight because it's like, well, maybe maybe they changed their mind. Maybe they'll have something in their speech that will suggest that they're going to lean in a different direction because of the United States, but they've already made their decision. So I don't care. I care about what the US is going to say. This oil inventories is coming out before Fed news. This oil news isn't going to be as important as next Wednesday's oil news. This Fed news is going to dictate a lot, not only for the United States, but globally. So what is it for those of you who've never been through a Fed day? So we get our statement. The actual Fed statement in and of itself are the minutes from the meeting. If you want to know what they said in the meeting, who voted for what, who didn't vote, like who didn't show up, it's in the statement. Like it's all right there. The Fed rate is interest rates, like literally the interest rate that people are talking about, the Fed changing to help control inflation. That's that. And then the press conference is when Jerome Powell, the Fed chair, actually gets in front of the media. He reads part of the statement or the whole statement. He goes on a little spiel about the economy, COVID, inflation, pricing, jobs, his typical thing. And then he answers questions. The questions portion is what always causes the market to go crazy because some of the questions are not known to him. So he's answering the question off the cuff. Most of them he does have, but he still sometimes can't answer the question without giving a sign that he's lying. Anyway, so why is all of this important? And I think I'm gonna stop. I'll just cover the last 2 days, but I'm gonna go into a little bit more detail on Wednesday because this is like super important for you guys to like really understand why Fed Day is so important. So, um, last year, even the year before, there was so much money put out into the marketplace. Like we're running trillions of dollars in a trade and a economic deficit because we just continue to print money. We have to print money because the US dollar is a debt instrument, meaning that in order for a dollar to be made, debt has to be created for it to be made. So all of this money, literally, all of this money that just got printed for stimulus, for PPP, all that kind of stuff is literally like for those of you who are married, or let's say for those of you who have somebody in your household, that's like you going to your spouse or your kid saying, hey, I need to borrow $100. Well, that $100 was already within your household. It just shifted hands. Literally, the Treasury asked the Fed for this money, and the Fed released the money, and the Treasury released IOUs, bonds. So when people are talking about the bond market, that's where bonds come from. Bonds come from the fact that the government had to borrow money essentially from itself. So all of these bonds are floating around now. All of this money is floating around now. Why is everyone being the government, government being Congress, Treasury, the Federal Reserve separately, because we know they're truly not the government. But why are they freaking out because people decided to put all of this money into bank accounts? Because when they print money, the money has to be spent in order to keep the economy running. And the money that they also printed went out to countries and they didn't receive goods back for money to be spent in the economy to keep the economy going. That's why supply shortages, that's why that whole element is so critical. So when we printed money, not only did the money come to citizens, that money went to pay off IOUs that, let's say, China had. China's holding bonds. Bonds equal IOUs. So I'm just going to use them interchangeably. China has them, and China's like, well, I'm not feeling too confident with your dollar right now, so I want to cash out my IOUs. We have to pay them in US dollars to get those IOUs back. Also, we had to pay China for goods. So then China has to send us goods. The whole element of the supply chain shortages happening, that was crazy to me, is we paid for items. You literally can force these countries to give you either the money back or the items. There should never have been a discrepancy there, because we always have other countries we can get the items from. It's just that whenever they wrote the bill and they signed it, there was a particular amount of money that they had set aside for this, for items that we needed. So they were trying to stay on budget, quote unquote, but nothing about our balance sheet in the United States right now is like on budget. So some of the items that we were waiting for from China, we could have easily have gotten from Brazil, Venezuela, Colombia, but we consider those to be dangerous countries. We consider those to be countries on the brink, countries we don't necessarily want to do heavy business with, because it would rock the boat with some of our other allies. So we just stick with what we know. So all this money got printed. It's like filling up a swimming pool. You're just filling it up, filling it up, filling it up. At some point in time, you're going to have to shut it off. And for the US, we literally overfilled the pool. So at some point in time, you have to do something to contain all of the water. You either have to build higher walls, make the walls of the pool higher. You have to like take buckets and like kind of scoop it out, reallocate, put that water somewhere else, make it useful. What interest rates do is help regulate the water in the pool. So interest rates are low. There's a lot of water in the pool. There's like money just going everywhere. Everyone wants to spend, everyone wants to take out a loan, everyone wants credit. When you raise interest rates, that's like taking a bucket and scooping out some water and deciding to put it somewhere else. That's drying up the water. That's taking water out of the pool. What makes this so dangerous and what makes this a delicate balancing act right now is that inflation is high. Prices are high, which is the inflation. Inflation is nothing new, because I always give you guys the example of, well, if you look in the past,